Alright, hello everyone, Alan T here. Welcome back to my YouTube channel. Now in this video, I'm going to talk about the one setup that made me a full-time trader. It's a very powerful setup. Okay, I'm going to show you the setup, and before we begin, make sure to hit the like button so that YouTube knows this is a high quality video and will share to more traders. Alright, thank you so much, and let's start the video. The one setup that made me a full-time trader is called impulse correction. Impulse. It looks like this. We have impulsive move, we have a tight corrections, and then we have more impulsive move. All right, for bearish pattern it looks like this. We have impulsive move, we have a corrections, and we have another impulsive move. Now this known as impulsive move, and then the small one here is called corrections, and another one will be impulsive move as well. All right, so what we need, or how we trade this type of setup, is when we have a retracement after an impulsive move, okay, then we determine when the retracement will be ended. And once the retracement ended, then we can start selling. In this case, it's a bearish pattern. We can start selling, and if the price go down, we will make profit. If the price go up, we have a tight retracement, a tight correction. And when the price ready to go up, you can start buying. And if the price go up, you're going to make profits. All right. Keep in mind that retracement can be deep. So in this case, it's a downtrend scenario. The retracement can go all the way up. Now, as long as the price is below the high here, below the origin here, okay, it's valid. It's still considered as corrections or retracement. Okay. Now, for bullish pattern, it looks like this. Now, as long as the price is above this low, this origin of the impulsive move, it's still considered as corrections. If the price close beyond, it's no longer considered as correction. It's a sideways or another pattern, right? Now, how to trade impulse correction impulse? Okay, so at first we have impulsive move, and then we may have a corrections. Then we need to determine when the correction is ended. When we started to see some bullish momentum picking up, we buy. If we sell, same thing, right? So the price is downtrend, then we determine when is the end of the correction pattern. When the price is ready to go down, we sell. If the price go down, we will make profits, right? So this is how the pattern looks like. And you will see a lot of patterns like this in the chart, and I'm going to show you now on the chart. Let us find some patterns on the chart so that you'll have better understanding. All right, first off, you can see here we have a very strong impulsive drop, and then we have a tight corrections right here. Now, a tight corrections will need 4 to 6 candles between there, and then we can start selling. Once we see, oh, you know what, the bearish momentum is picking up, you can have one entry trigger. Let's say this engulfing, a small engulfing right here, a partial engulfing as your entry trigger. Tight stops, 1 to 2 risk rewards. Now, if you aim 1 to 2.5, you still get filled, right? But if you aim 1 to 3, you may not get filled in this case. Okay, next one, let's see, we have one here. Okay, this is another one. We have one impulsive move all the way down. All right, and then the price make a deeper retracement. Now, as I mentioned just now, as long as the price is below this origin, below this high, it's still considered as a retracement. This is a very deep retracement. Okay, to help you to find the level of interest, to help you to have a better entry decisions, you can pull a Fibonacci 2 from the high of this beginning of this impulsive move all the way down to the low, and find whether 618 level or above it. Now in this case 786, so this will be the entry trigger that we need. You can sell here early and it will be a losing trade. All right, so now this is a loss here, then you place another entry on here. Stop loss, let's make it 15 pips, and TP, let's make it 1 to 1 to 3, right? So we got a 1 to 3 risk rewards ratio right here. Now this is also impulse, a tight corrections, and impulsive move right here. Okay, so our entry would be at on this candle. I believe my entry will be on this candle. I do not want to enter early. I want to see some commitments. So maybe around 23, 24, 25 pips. TP will be at 1 to 2. And boom. All right. And we have one more here. Impulsive move. Corrections. And another impulsive move. So once I have this, I have impulsive move. I have corrections, you can start to look for a sell signal. The price tested the structure one time, two times. Now I know that, oh, this could be a tight correction. So over here, engulfing, this would be my entry trigger. Okay, entry, stop loss, let's make it 15 pips, and TP, let's aim for 1 to 3, and boom. Okay, it got filled. And let's look for the next one. So we have one here, impulsive move, a very deep corrections. The price go up, a very long corrections. Okay, eventually the price broke a structure. Now this could be my entry trigger. So I will sell here. Stop loss would just be at 40 pips, TP 1 to 2, and I got filled again. We have one here as well. Now, as I mentioned, it's everywhere on the chart how powerful this is. That's why this is the setup that made me a full-time trader. Now, in this case, if I aim for 1 to 3, I would not get filled, right? So it will be a losing trade for me. Okay, and then we just wait. We have one here. We have impulsive move, a tight correction. Then this is when we can place our entry after the break. Okay, it will be a safer place for us to place our entry. 20 pips, 1 to 3, it got filled. 1 to 2.5, it got filled as well. All right, and then the price drop. Now this would be a drop. 4 to 6 candle is the minimum we need for a tight correction. So this engulfing will be our entry trigger. I place a sell here, 20 pip stops, TP, let's aim for 1 to 3. And the price did not go all the way down, it stopped here, so it will be a break-even trade for me. All right, and then let's see, we have one more, impulse, correction, impulse. So this is not the setup that I want because this is not impulsive enough. Okay, but this whole move here is impulsive move. All right, so if I were to buy, okay, so this is impulsive move, this is a retracement. I can use the Fibonacci tool for me to determine where is the likely place the price will stop. In this case, we have a signal on the 618. So let me place a buy order, 10 pip stop, 50 TP, let's say is here. It's a 1 to 4 risk rewards ratio in just 14 hours, right? 2 days, almost 2 days. Okay, so the next day you wake up after work, you come back home, the price already hit TP. We have one more impulsive move, a correction. This is when I'll place my entry, a sell order right here. Let's see how powerful this is. Okay. Tight stop, 15 pips. Let's see. TP 1 to 3. If I 1 to 3 TP, it will not get filled, but 1 to 2.5 it will get filled. So it's either a break-even trade or I will just close it when the price go higher. Right, so you can see it's everywhere on the chart, even on different pair. Let's see USD CAD. You see it everywhere, right? We have impulsive move. The price do corrections and then go up, impulsive move, corrections, go up. Impulsive drop, corrections, then go down, right? We have a tight one right here. We have impulsive drop, we have corrections, we have corrections, we have corrections, and then the prices keep melting. We don't have anything here. Then impulsive move, correction, then price go up, impulsive move, corrections, then price go down. This is the setup that I use for many years, and it's really powerful, right? So your job is to be able to identify. You have to train yourself to identify the setup. Number 2, you need to know where you want to trade. You do not want to get into early because you know that the price may do a deeper correction pattern like this. Let's say you sell here and then the price stall for a very long time. Okay, so you want to have a certain rules saying that you won't be able to trade too early, so you won't get caught at the wrong side of the market and you will make some profits. We have impulsive drop right here, corrections, another drop, right? Impulsive push, a very tight corrections, and then the price keep going up. It works on a different time frame, let's say 4-hour time frame, right? Impulsive drop, corrections, the price drop. How about dollar Swiss? That's a very corrective pair. And let's go to 50 minutes time frame. You will see the same thing as well. Impulsive move, corrections. All right, this is where we enter. Okay, we have impulsive move, corrections. This is where we sell, but because it's a weekend market, so the setup is not valid. Then let's see. Okay, impulsive move, corrections. Then we buy. Impulsive move, corrections. Then we buy. Right? So it's everywhere. Okay, just find it be serious about it, do more work, do more homework, and then you'll find it everywhere. Right here, impulse, fraction, impulse. It's on everywhere. Any time frame you can use it and make a lot of profits with it. Okay, so I hope you learned something new. Let's try out. Make sure to do a lot of practice before you make it into your training plan. So I hope you enjoyed this video. I hope you learned something new. I hope you find it useful. Make sure to like, share, subscribe, and I'll see you in the next one. My name is Alan T. See you.